Have you ever stopped to think how something, well, seemingly abstract like blockchain could actually shake up something as solid as global finance? Sounds a bit like sci-fi, right? But it's really happening now. Here at the Deep Dive, we sift through piles of research, basically, to give you the key takeaways, a shortcut to getting up to speed. Okay, let's unpack this. So for this deep dive, we're digging into blockchain's impact on traditional finance, specifically what's happening in 2025. And the sources we've pulled together, they really paint a clear picture, lots of innovation, big efficiency boosts, and this really interesting blend starting to happen between the digital and, the regular financial worlds.
Exactly. And this isn't just some abstract economic theory. As we get into it, you'll find some honestly surprising facts, and you'll get insights into how this whole changing landscape might actually, shape your financial activities down the line. It's revealing transformations that, frankly, were hard to imagine just a few years back. Things are moving fast.
Okay, so let's dive right in. One of the biggest shifts our analysis points to is this mainstream move towards tokenized real-world assets, RWAs. And here's where it gets really interesting, because it starts to change how we even think about owning stuff.
Right. Tokenized RWAs, it sounds complex, but the idea is pretty straightforward. You take a real-world asset, could be anything, real estate, stocks, commodities like gold, even art, and you essentially digitize its ownership. You represent it with a digital token on a blockchain. Think of it like taking the deed to a house, creating a unique digital token for it, and then that token can be bought, sold, maybe even split into smaller pieces.
Lots of pieces, so you could own just a fraction?
Precisely. And that's one of the huge benefits highlighted everywhere, fractional ownership. But also, it massively increases liquidity for things that were traditionally hard to sell quickly, like maybe certain types of real estate or private equity. It expands who can access these markets. Suddenly it's global. And, you mentioned fractional ownership. Imagine owning a tiny slice of a skyscraper, or a piece of a famous painting. One source even talked about rare wine futures being tokenized. Plus, this facilitates 24/7 trading across the globe. No more waiting for markets to open. Traditional markets just can't do that.
Wow. Okay, so if you're listening, thinking about investing or even buying property someday, how does this really change your approach? It sounds like it could open up access to wealth, in a way we haven't really seen.
Democratizing it, maybe?
That's a good way to put it. Democratizing access is a key theme.
So, okay, that's changing what we own. But blockchain's also shaking up how we do finance. Let's talk about decentralized finance, DeFi. This is where the whole cutting out the middleman idea really comes into play, right? Absolutely. DeFi platforms are built specifically to operate without those traditional intermediaries, banks, brokers. It allows for direct peer-to-peer stuff, lending, borrowing, trading directly between individuals or entities. And what that means for you, the user, is potentially more accessible services. More transparency, too, because you can often see the rules, the code governing the platform. You might bypass some fees, some hurdles you'd face in the traditional system.
How does that work securely, though, without the bank guaranteeing things?
That's where smart contracts come in. They're crucial. These are basically agreements written in code on the blockchain, self-executing. The terms are baked right in. So if condition A is met, then action B automatically happens. No need for someone to manually check and approve, usually. This automation drastically cuts costs and settlement times. Think about international payments. Sources we looked at consistently show transactions that used to take days, now potentially taking seconds.
Seconds? Really? That's incredible.
Yeah, and imagine what that means for a small business dealing internationally. One analysis suggested cutting cross-border fees by 80%. That's huge. And it's not just payments. Things like loan approvals, identity checks. They're getting streamlined too. Less paperwork, faster processing.
Okay, the speed is one thing, but you said streamlined loan approvals. Does that mean no human looks at it, just code? What happens if there's a bug in that smart contract code? Could that mess up someone's loan? That seems, like a different kind of risk. We're trusting code instead of people or institutions.
That's a very valid point, and it's a major area of development and, frankly, concern. Streamlined doesn't necessarily mean zero human oversight, especially for complex things like loans. It often means automating the verifiable parts, credit score checks, income verification connected via APIs, maybe collateral validation if it's crypto-backed. But yes, errors in smart contract code are a risk. We've seen exploits happen in DeFi. That's why code audits, insurance, and robust testing are becoming so critical in this space. It's a shift, as you say, towards trusting verifiable code and mathematics, but it requires diligence. It's not foolproof yet.
Right. Okay. So new risks, new safeguards needed. Makes sense. Now, it's fascinating seeing these DeFi platforms emerge, sort of outside the traditional system. But what's also really interesting is how the old guard, the traditional banks, are reacting. They're not just watching anymore, are they? They're actually starting to use blockchain themselves.
Oh, absolutely. That's a major trend for 2025. Big banks, established financial institutions, they're actively integrating blockchain. We're seeing them launch crypto-backed loan products, for instance. You can borrow cash using your Bitcoin or Ether as collateral. They're also offering custody services, holding digital assets securely for clients, which is a big step, signifies real acceptance.
So they're keeping customers within their ecosystem, but offering these new crypto services.
Exactly. It allows customers to sort of bridge the gap. They can engage with digital assets, but still have the familiarity and, frankly, the regulatory umbrella of their traditional bank. And this hybridization, as some reports call it, it's quite powerful. You're trying to get the best of both worlds, really. The efficiency, the speed, the transparency that blockchain can offer, but combine it with the regulatory oversight, the stability, the consumer protections that people, expect from their bank. It's about building trust while still innovating.
That blend sounds pretty appealing. Best of both worlds, like you said. But, surely it's not that easy. What are the roadblocks? What kind of friction are these big established banks hitting when they try to bolt on this, decentralized tech onto their old centralized systems? The sources must mention challenges.
Oh, definitely. It's not a seamless transition. One huge challenge that comes up repeatedly is the sheer cost and complexity of updating or replacing their legacy IT systems. These old mainframes weren't built for blockchain. Then there's the whole regulatory landscape. It's still evolving and it's different everywhere. So navigating that patchwork quilt of rules is tricky, especially for global banks.
So it costs a lot, and the rules are still fuzzy in places.
Right. But despite those hurdles, the data suggests it's worth it for them. Studies we reviewed actually show that banks implementing blockchain are seeing tangible improvements in their financial performance. We're talking better return on assets ROA and return on equity ROE.
Okay, so bottom line benefits. How? Where are the savings or gains coming from?
It seems to come down to a few key things. Significant cost reductions from automating processes, like we discussed with smart contracts, streamlined operations, less back office admin, and also enhanced security for certain types of transactions, which can reduce fraud losses. So yeah, the integration pain seems to be offset by real financial gains.
Interesting. So even the big traditional players are seeing value. But the impact isn't just within private banks, is it? It goes right to the core of money itself, with governments and central banks getting involved, central bank digital currencies, CBDCs. That sounds huge.
It is huge. CBDCs represent a major modernization push for national payment systems. And a big driver is financial inclusion, trying to bring people who don't have bank accounts into the formal financial system. The scale here is pretty staggering. Our sources indicate well over 100 countries are now somewhere in the process, either researching, piloting, or actually having launched a CBDC, often using blockchain or similar distributed ledger technology as the foundation. This isn't a fringe idea anymore, it's a global trend.
So, connecting that back to you listening, imagine a future where your national currency, the dollar, the euro, whatever it is, exists digitally on a system run by the central bank. Maybe that allows for instant, super secure payments directly, perhaps even bypassing some commercial bank fees for basic transfers. It really could redefine that relationship between, you as a citizen and the whole monetary system. A big step toward the more plugged-in global economy.
A fundamental shift, potentially.
And looking even further ahead, the sources point towards something else really exciting. Blockchain isn't developing in a vacuum. It's starting to merge, to converge with other big technologies, specifically things like artificial intelligence, AI, and open banking.
Exactly, and that convergence is where things get even more powerful. When you combine blockchain's secure ledger with AI's analytical power, you can do amazing things. Think truly real-time payments that are also smart. Maybe they automatically categorize spending or flag suspicious activity with incredible accuracy. We're seeing the rise of embedded finance. Finance baked right into other apps or services. So, maybe financing a large purchase happens instantly within the shopping app itself, powered by DeFi protocols and verified on the blockchain. And AI analyzing blockchain data promises much more advanced fraud detection than we have today. Faster, more efficient, more secure finance across the board.
Wow.
And if we tie this all together, what we're seeing is regulators are slowly but surely providing more clarity. Major traditional players are committing resources. Blockchain is really solidifying its place. It's becoming a foundational piece of modern finance. It's effectively bridging that old gap between traditional finance and the new digital world. not just for a year or two, but likely for decades.
What a journey we've just taken. It's pretty incredible to step back and see it all. From, tokenizing real-world stuff like buildings to DeFi, cutting out the middleman, then seeing traditional banks actually adopting the tech, and now whole countries exploring digital currencies. Blockchain's impact is just
massive. It really feels like some of these changes are accelerating, doesn't it? Things like tokenized assets sounded so futuristic just, 5 years ago? Now they're genuinely influencing finance globally.
the pace is remarkable.
So here's a final thought to chew on, something for you to consider. Given everything we've talked about, this move to 24/7 global trading, owning fractions of assets, this blend of old and new finance, how might your own approach to investing or saving, or even just how you think about what ownership means, how might that fundamentally change in the next few years? Will you be looking at fractional art investments, using a peer-to-peer lending platform, or maybe just doing more with a national digital currency? It's definitely something worth mulling over. We really encourage you to keep digging into these shifts yourself. They're shaping our financial future right now.